Hi, this is Dan Pocket, Director of the Willimantic Public Library. I'm here today with Pam from Liberty Bank. She's the Community Outreach Officer, and she's here today. She's going to talk to us all about credit reports and your credit score and trying to get a better understanding of all that. So thanks for joining me today here, Pam.
Hi, Dan. Thank you for having me. I'm excited today to talk to you guys about credit reports and scores. If anyone has any questions, you can write it in the chat and Dan will let us know as we go through. This presentation is a shortened version of the FDIC's Money Smart. If anyone would like to see the full version or to get some handouts, you can go to fdic.gov/moneysmart. So credit reports and credit scores are really important for your financial overall health, really understanding them and know how things work with them. You have a right to get a free credit report every year. And the way to do that is to go through annualcreditreport.com. That's the safest way, and that is the way that is recommended through the government. There are a lot of people out there that will offer you free credit reports, but what happens many times is you go to the actual site and they'll ask for a credit card, and then you are signed up for a monthly credit report or some other report that you didn't intend to get, and you'll see charges pop up on your credit report, your credit card statement. So it's really, you want to be really careful, and going to annual credit report is the safest way. When you go to annualcreditreport.com, it's going to ask you if you want to get your credit report from one of the three credit reporting agencies. So the three are Equifax, Experian, or TransUnion. And it really doesn't matter which one you pick. They all get pretty much the same information. Sometimes they just get them maybe a month or two apart from each other. So they may vary slightly, but you'll get the same basic information. And if you're just looking at your credit report to see your standings, you don't really need to pull all three at the same time. This way you have some flexibility, and during the year you can go back in. And so if you picked Equifax the first time, maybe in 6 months you want to check again, you can get your free report from Experian, and then later TransUnion. So when you get your credit report, there's some things that you want to check on there to see if all the information is really you, making sure nobody is using your identity. Make sure that the credit bureaus haven't made any mistakes in reporting information that is somebody else's. Make sure that if you paid something in full, that it's marked that way on your credit report and not showing as still an open account. The first section of your credit report talks about your personal information. So on there, it will have your name, but it will have any name that you've ever gone by that had credit information reported. So if you were changed your name when you got married, it should have your name before you got married and then your new name. Sometimes if you have a middle initial you use, it might have your name with the initial in it once and then another time without it. So you want to just make sure that it's just your name. If you go by John T. Smith and you see on there John Richard Smith, that's something that you want to make a note of and check into, because a lot of times common names, that other person's information can get reported onto your report, especially if you are a junior. So sometimes you might have your father's information on there, or if you have a cousin with the same name, her information could be on there as well. So you always want to check the names and make sure it's your exact name. It will say where you currently live and where you lived previously. If there's another address on there that you've never lived at, that's a red flag that you want to identify and then let the credit bureaus know. The next section is your public records. So what this section is, it covers anything that deals with the court. So if you, for some reason, didn't pay your car taxes and your town reported it, it would show up under public records that you have outstanding tax bills. It would also show up if you owe child support, or if you went to small claims court and had a judgment that you had to fulfill. It would show up on there if you didn't make your payment. Public records doesn't include things that are criminal records. So if you have a speeding ticket, that won't show up on here. It's just any debts that you owe the courts. The next account, accounts assigned or sold, that section of your report has probably what we see in the bank the most times with problems. This is a section people really don't think about. And under here are things that are turned over to debt collectors. So what would be in this section is, say you and your college roommate had cable TV. And when you moved out of your apartment, you never returned the cable boxes. So years went by and the cable company, they couldn't find you to try to collect these. They charged you a fee and they put it ended up sending it to a debt collector. That would show up under accounts assigned. So you might see Comcast for $100 or $400. Things like that really impact your credit, but they're little things that we don't think about. Other things that can fall in this category are medical expenses. So say you have a hospital bill and it's a large bill and you really believe your insurance should cover it, but your insurance isn't covering it right now and the hospital keeps sending you a bill. And you ignore that bill because you're arguing with your insurance company. After about 180 days, the hospital will assign that bill to a debt collector to try to collect the payment. And that's when that shows up on your credit report. So to avoid that from happening, it's really important if you have any medical expenses and you haven't paid them yet because either you don't have the money to pay them or you believe your insurance should, you contact the hospital or the doctor's office right away and get set up on a payment plan. As long as you're making some kind of payment to the hospital, they won't report you to a debt collector and it will avoid your credit report altogether, and it will really help your credit. The next section is on credit accounts. So these would all be your actual loans that you have. So it could be your student loans in here, your mortgage, your credit cards. So any credit card that you have open, whether or not it has a balance on it, will show up under credit accounts. Under credit accounts, it shows all accounts that are currently open and accounts that have closed. The closed accounts will stay on there for 7 years. After that, it will also show up on there if you miss any payments. So if it will show that you made all your payments on time, but it'll also show anytime you miss a payment and it goes 30 days past due, then it will report again 60 or, and it will keep building on 90 days, and those will show up on there. So even if yes.
We had a question. Someone was just asking, how long, if you miss a payment, how long would that actually stay on your credit report?
Oh, that's a great question. So things stay on your credit report between 7 and 10 years. So one missed payment really does have an impact on your credit. The thing is, it doesn't get reported until it's been missed till it's 30 days late. So if, for example, your credit card bill comes in and you're on vacation, and when you get home, you open it, you see it was due yesterday. If you pay that right away, you'll still be late in the credit card company's eyes and probably have a late fee, but you'll be under the 30-day window and it won't show up on your credit report. So that's why it's really important if you miss something that you just don't say, oh, I'll catch it next month. Really take action right away, because the more times that you're late, the worse or the longer it's going to impact your credit. The last section is on inquiries. And people get a little bit confused with this and worry, well, if I'm checking my own credit report, is it going to show up there against me that an inquiry was made? You can check your own credit report as much as you want, and it will not be held against you. The inquiries that are of concern that could impact your credit are just when you apply for new credit. So if a person goes out and applies for 5 different credit cards, all those, every time they applied for a different card, it would show up under inquiries, and it would set up some concern, and that could lower your credit score a little bit. So it's the inquiries just show the new credit that is people are looking at. If you currently have a credit card, the company that you have the card with can periodically check your credit just to see if you're still in good standings, but that won't be negative against your credit. It could show up under inquiries, but it would be called what's a soft pull, and that doesn't impact you negatively.
Pam, just a question for me. These are all about your credit report. Is your credit score also on your credit report, or is that somewhere else?
Oh, that's a great question. A lot of people think when they pull their credit report, it's going to have their score on there somewhere. But the score, your credit score, is not part of the free annual credit report that you get. Your credit score is separate. And actually, the next slide goes into that in a little detail. So when you go to get your free credit report, they're going to ask you at that time if you would like to get a credit score. And you will be charged at that time. So if you chose Equifax or TransUnion, they would ask you, and if you did want one, I think the last time I looked, it was $10. You could, at that time, sign up and get your credit score. The other place, if you just want to get your score, is you can go to myfico.com to get your FICO score. The reason I would recommend that you get a FICO score as opposed to a Vantage score is because FICO is a score that most banks use. Most banks and credit unions use the FICO score. There are lots of credit scores, which a lot of people didn't realize either, that there are many scores out there. And so you have to really be careful as to which score you're picking. But another place you can also get your credit score is a lot of times on your credit card statement, it will have your credit score. So you just want to see what score is actually the score they're giving you. And somewhere on there will tell you if it's your FICO score or a Vantage score. So the score that's used the most is the FICO score, and that's the one you really want to look into. And how that score is calculated, it's a model, and it is done looking at 5 basic sections of your payment histories. So the first section, the biggest section, which counts for 35%, is actual payment histories, and that is, are you paying your bills on time? So when someone says, what's the best thing I can do for my credit or to keep a good credit score, it would be to make sure you make every payment on time. And sometimes it might be difficult if you have a high balance on your credit card, but as long as you can just make the minimum payment, it will still be fine for this section of your score. The second section that really has a big impact is the amount owed, or sometimes called the utility part of your credit score. And what they're looking for here is they want to see how much debt you have available to you. So if you have a credit card and it has a credit limit of, say, $900, they want to see if how much of that $900 you've actually used. So if you haven't used any, that's really good. That means you still have $900 available to you. And that's, you get, the higher points towards your score. If you've used $800 of your credit limit, that's bad. And that means points get taken away from you. So you really want to try to never charge more. The rule of thumb is 30% of your available balance. You always want to try to stay under 30, but really it's best if you don't keep any balance on your card. And if you have a credit card and you use it, you make one purchase and pay it off in the same month. That is still helping to build your credit, but it's not taking any points off from your score. So a lot of times people think, oh, I have to leave a balance on my card in order to build my credit score, but that's not true. As long as you have the card open, then it's still giving you the benefit.
So Pam, is it better to, like, if you're using credit cards, have like 2 credit cards with a lower balance, or just 1 credit card that goes over that 30%?
Right. Yes, that's a great point. Yes, it is better to have, believe it or not, if you have a smaller balance on 2 cards as opposed to maxing 1 card out. And it's just the way that things are calculated. Now, just to throw another wrench into the situation, the FICO model has a lot of different versions. So they are coming out with a new FICO model 10, they're calling, or version 10. And in that version, they're going to be calculating the amount owed a little bit differently. But now the current version that most banks are using, the least amount that you have on a particular card, the better. So that's a really good point. Spreading it out, your debt out, will help your score. Another thing that really helps is the length of credit history. So needless to say, the longer you have had good credit, the higher your score. That's what makes it a little bit challenging for somebody brand new. A lot of times when you're just, 18, 19, 20, and you want to get your first credit card, you may get denied. And the reason could be for a lack of credit history. So actually building your credit history over time is helpful. That's why you never want to open up credit cards and then close them right away. That can be detrimental to your score. So before you pick a credit card that you want to have, you really want to do your research and pick one that's going to be, that you're going to want to keep for a while. So you're going to want to make sure it has a lower interest rate, that maybe it doesn't have an annual fee, that maybe if you want points for a particular either cash back or you like to travel, that you find a card that meets all the things that you're looking for and then apply for that. So it's really not good to just open a card, change your mind, and open another one later. Your credit mix is another 10%. And what that means is that you have a mix of loans. So you might have an installment loan, which would be like a car loan that you have the same amount of payment every month, and then it's going to have a term where it will pay off. And then you maybe have some revolving debt, which would be a credit card where the balance on it is always changing. If you have a mortgage, that's really good. A home loan, that really helps to build your credit. So having a good mix and balance. And then the last thing is new credit. Every time you get some new credit onto you get a new loan, a new credit card, that can have an impact on your score. So if you start to get too much new credit, it's bad. If you have a little new when you're starting out, that starts to help build your credit. So it's kind of a fine balance there. What is a good score to have? So the best scores, if you have up in the 800s, that's not too common. 800 is probably one of the rarer scores that you see, 800 to 850. A lot of people fall in the 700 range, which is great. And you can really get a good interest rate on your loans in that range. When you're starting out, you might end up being more in the 600s, so you can start to build your credit. And you really want to try to get up into the good category. The reason it's important to have the higher your score is a lot of times for different products, loan products, you might not qualify for them until you hit a certain range. For example, if you're trying to buy a house, usually you have to be around 640 or higher. But the higher your score, sometimes there are different programs that you qualify for that you can have a better interest rate, or you might qualify for some down payment assistance programs. So the higher your score, the better your interest rate, and then the lower your monthly payment will be. And over the long run, you'll save a lot of money that way.
How would I build my credit? Oh, there you go.
Yeah, so that's a great question about building credit, because a lot of times people who are just starting out don't have any credit, and they aren't sure because they go to apply for a credit card and they get denied. So it's kind of one of those things. How can I build my credit if I can't get credit? So one option is to get a secured credit card. That's when you actually put maybe $500 you give to the credit card company. They hold that money in an account for you, and then they give you a credit card with a limit of $500. So you can go and use that credit card, and then every time you do and you make a payment, it starts to build your credit history. And then when you get to a certain point, after a few months go by, you'll start to build your credit score. And then a lot of times the company will offer you an unsecured credit card. And then you can build your credit even more. Another option is a credit building loan. Liberty Bank has a great one. It's called our Credit Builder account. And this is a loan where you have money secured in a savings account, and you get what's called an installment loan on that. So you're going to make a monthly payment of, say, $50 a month until that loan is paid, and the bank is reporting it to the credit bureaus for you. So it's showing that you're making your monthly payments on time, that you have an installment loan, so it's different from some revolving debt, and it really helps to build your credit. One thing is really great if you can be an authorized user on a credit card. The only thing that is really important if you're going to be an authorized user, the person who has the card needs to have good credit. You don't want to be an authorized user on somebody who is missing payments on their credit card, because that will impact you as well. So how an authorized user works, and this happens a lot with college students, say. They're going off to college and the parent would like them to have a credit card for an emergency, and they make them an authorized user. So the student can get a credit card. It's still the parent's account, parent's credit card, but they have a card with their name on it. You can limit the amount, like say that card can only be used for a $100 purchase. And then what happens is the student builds on the parent's good credit. So and it doesn't have to be a parent student, it can be anyone, can be an authorized user on anyone else's account if the person agrees to it. But again, you want to just make sure the person has really good credit that you're using, or they are authorized on their card for. Another way is to get a co-signer. So if you want to purchase, say, an automobile, you have someone be a co-signer with you, and then as you're making all your payments on time, your credit is improving. Sometimes getting smaller credit cards is easier than a big, like a Visa or a MasterCard. So if you get a store or a gas station credit card that's only for that one particular place, it usually is easier. And then after using it for a short amount of time, you can be offered a Visa. And so those are really the things for building your credit. It takes time. You have to really, work at it at least, 6 months to a year before you start to see some big increases in your credit score. but it's worth doing, and it's worth doing it before you want to purchase something. So that way, when it comes time that you want to buy your first house, or you need to buy a car, you already have some credit established.
How big of a difference would that make, say, on if you are going to buy a house, being in a good credit score range or something worse? What's the difference look like in that?
Oh, it's really huge. Because if your score is a little bit too low, you might not be able to get, you might find your dream house and but not be able to qualify for the loan. And then as your score gets a little bit higher, there's some really great programs available, especially to first-time home buyers. But your score has to be at a certain level in order to get those products. So when you're interested in getting a home, the first thing that you usually should do is meet with a loan officer, and they'll go through your credit report and tell you things that you should work on. They'll tell you if your score is high enough or needs to get a little bit higher in order to get certain programs. So you'll know ahead of time, and you can work on all these things before you actually find the house that you want. So, but credit score is really important when it comes to home buying and any purchases. I've talked to people who in the past have had to declare bankruptcy, and their credit score was very low after that. And then they went to buy a car. They needed a car to get to work, and they ended up with an interest rate of 24%, which is outrageous for a car loan. But it was the only thing that they could qualify for because their credit score was so low. So, it really does make a huge difference. So some people who don't have any debt yet, but really want to start building their credit, there are some other things too that can start to help to build your credit. One right now is rent. So if you're currently paying rent, you can ask your landlord if they would report your monthly rent payments to the credit bureaus. And then it would show up on there as a monthly payment that you're making every month on time. Of course, that would be negative if you missed making a month or two of your rent payments. It would have the same impact as missing a loan payment. So you want to be sure that you're always making your payments on time. But a lot of companies have that already set up. Bigger apartment companies, management companies have it already set up, so it's very easy for them to start reporting your rent. But even a single landlord can do it for you, and it really does help to boost your score. Some of these other things on this slide, like your cell phone bills, your electric bills, childcare bills, those are up to you to start keeping a record of. So if you keep your electric bill every month, and you show that, you can see on the bill from month to month that you're making your payments on time, keeping a record and a file of all those can sometimes help to show that you are a good credit risk. So now that you have started to build your credit, you have a credit score, and things are going well, you really just want to make sure that you're maintaining your credit, and paying your bills on time as agreed is really important. Sometimes people think, oh, it won't hurt me if I miss a payment or two, or but it really does in the long run have a big impact on your credit score. You want to always try to remember to keep paying down your debt and not get, a little crazy and say, oh, I'll just charge this, I'll charge that, because, things can get carried away, and then you can max out your cards, and then it's really hard to start paying them down, especially because some credit cards have high interest rates. So it makes it even take longer to pay down your debt. So you want to always be aware of how much debt you have and try to minimize it as much as possible. Never go over your credit limits. Always stay under your limit. Don't apply for too much credit. Don't, once you get accepted for one card, don't say, this is great, and go to, I've seen people go to the mall and go in every store that if you get a credit card, then you get maybe 10% off your purchase, your first purchase. So they kind of go nuts, and then end up all of those little store cards show up on your credit report and can have an impact on your score. So, just making sure that you pay all of your bills and your debts, your taxes, child support, anything that you owe money to that you think, oh, that's not going to be on my credit report. Eventually it will get on your credit report if it ends up being past due and going to a debt collector. So just make sure you keep up on everything you have to. And if you have something that is, not right or charged wrong, you really need to take the time to fix that, because if you don't, it will come back to haunt you. So that's what you want to, why you want to check your credit report every year. And if there's any errors on there, you want to dispute them. I don't think we talked about that, but disputing the errors is pretty simple now, because when you get your free credit report, Experian or Equifax, whoever you're getting it from, will have right on the report the steps you need to take if you find something wrong. And so, and then they, by law, have to get back, investigate it and get back to you. So you want to make sure you give them all the documentation. If you have a paid receipt, if there's an incorrect name on there, if you give them all this information, they have to make the corrections. And really keeping good financial records, because if you do keep a record of everything being paid on time, that will help you when you go to apply for loans and future purchases.
We had a patron question here. If someone found themselves with too much credit or in credit problems, are debt consolidation options good to do?
That's a great question. So there are lots of different options if you get yourself into some credit problems. The first thing you can do is look at your, credit report yourself. Maybe talk to your bank or talk to another person who may have more advice, a certified financial planner, and just look and see if it's little things that you can fix yourself. If it is, then you just need to make those corrections and adjustments and catch up on your payments. If you get into a lot of debt and have a lot of problems, then you might need to talk to a credit counselor. A really good place to check is if you go to HUD.gov and look at their approved list of counselors. What they've done is they have a list of credit counselors that are checked out and certified by the government, so that you know that you're not getting somebody who's going to scam you or to try to, take away, actually charge you a lot of money in order to fix your credit. So there are a lot of people out there that are going to say they can help fix your credit, but you really want to look out if someone says they can help fix your credit in a week or 24 hours. It takes time, and you want to make sure they're not charging you too much money, because it might be something you can just do yourself. So those are all things that you really want to look out for. So making sure you find a person who's certified and is really a great thing to do.
Now, with all that's going on in the world today, it's very unique times. Should people be watching out for, scammers or problems on their credit that might not normally have shown up?
That's also a great question. Yes, during this time, whenever there's a financial crisis or a disaster of any sort, unfortunately, there are people out there trying to take advantage of others. So you might want to check your credit report more frequently. And the credit bureaus during this time right now are allowing you to check your credit report for free every week. That might be a little excessive for you to check your credit report every week, but maybe monthly during this time would be something that you want to do just to make sure that nothing pops up on there that shouldn't. If during this time you're having any trouble at all paying your bills on time, what you want to do first is to contact your lender and see there might be a program in place to put your loan on deferment or forbearance so that you have some time. You don't have to make your payments and it won't show up negative on your credit report. So, for example, student loans right now, you can put those on hold for payment for, I think it's up through July. It might even be farther, but you can without it impacting your credit score. Now, if you just say, oh, I don't really have to make my payments during this time because it's a lot going on, they still will get reported as not being paid and it will hurt your credit. So you have to take the action and talk to your lenders, talk to, if you can't make your utility payments, talk to them and see if you could get on a lower payment plan. There's a lot of companies are willing to work with you, but you have to reach out to them and make the first, move to get things resolved. So definitely don't ignore the situation, take action. And then you can check your credit report more frequently and make sure everything's being reported correctly. So here are some of the things we just talked about. If you need to get help, a lot of times asking at your bank, they are always more than willing to help you. If they don't have the answers, we will report you to the right person. Will head you in the right direction. We have a lot of resources that we can share with you. And then here is HUD's on here as well, and a lot of nonprofit consumer credit counseling. We partner with a lot of nonprofits across the state who have teams of people who are wonderful and will work with you to help you with credit problems at either no charge or very minimal charges. And then there are also certified financial planners and other people who can help as well. So the main thing is to just do your homework and make sure that you're talking with someone who really is who they say they are and isn't going to be taking advantage of you. So always ask if you have questions.
Great. Thank you.
And that's about all I have for you today.
Thank you very much, Pam. This was wonderful. A lot of great information, and I think our patients are really thankful for you presenting this to us today.
Great, thank you. Questions? You can always, stop by the library and let Dan know, or you can always stop in any Liberty Bank branch or go to visit our website, and we'd be happy to help you.
Thanks, and I'd just say if people have other interest in different financial topics, they should let us know too, and maybe we can do something like this again.
Great. Thank you.
Thanks, Pam. Have a great day.
You too.